In this video, I'm going to break down the exact trading strategy that consistently pulls in an average of £1,000 a day across my accounts. Here's the good news. It doesn't matter if you've never placed a trade in your life or if you've been staring at charts for years. If you follow these specific rules I'm about to show you, you can replicate these kind of results. We're talking about a strategy that in the last 2 weeks alone gave us a strike rate near 100% on Bitcoin and nearly 70% on gold. And listen, we didn't get these numbers by being glued to the screen 24/7 or using some dodgy indicators that look like a rainbow thrown up on your chart. No, this works because I'm not guessing. I spent years in this industry walking into the offices in the city and Canary Wharf, seeing how the sausage is made. This strategy isn't something I found on a forum. It's based on how institutional algorithms actually move money. Today, I'm not going to just teach you the theory. I'm going to show you real live execution, real money on the line where I bank £800, £1,500 right in front of your eyes. But before we dive in, if you want to support the channel and help other traders find honest strategies, smash that like button. It tells YouTube this is quality content and prove the strategy works. Right, let's get to it. Before we get to the secret sauce, you need to understand the playing field. If you miss this, the strategy fails. Simple as that. Trading is a two-way street. We can make money when the market rallies and we can make money when it crashes by shorting. We are simply placing a probability based on supply and demand. When price flies up, demand exceeds supply. When it tanks, supply exceeded demand. Our job is to spot where the smart money, the banks, the institutions are stepping in and simply ride their coattails. How do we do that? We look for key zones. Look at this level here. Touch once, reject. Touch twice, reject. This is a key zone. It acts as a floor, support, or a ceiling, resistance. If you had simply bought every time price touches floor, you'd be in profit. But eventually floors break. And when they do, that floor often becomes a ceiling. We call this a break and retest. Basic stuff, but essential. Now, standing support and resistance is fine, but it's retail stuff. To make the real money, the £1,000 days, we need to trade like the institutions. I remember back when I was working on a trade floor in London, I'm sitting there surrounded by screens, noise, squawk boxes going off, and I realized something that completely changed my career. When a massive hedge fund or a bank wants to enter a position, they don't care about a double bottom or an RSI indicator. They have an order for 50 million quid and they need it filled now. When they hit that buy button with that much volume, there literally aren't enough sellers to match them at the current price. So what happens? The price explodes upwards, skipping levels entirely. That violent move, that is the institution leaving its footprint. We call that imbalance or fair value gap. I saw this happen live on the terminals in London. The market creates a vacuum, a gap, where orders weren't filled efficiently. And here is the secret I learned on the floor. The market hates inefficiency. The algorithms have to bring the price back down to fill that gap eventually. It acts like a magnet. And that's where we strike. We aren't guessing, we're just cleaning up the mess the banks left behind. But you can't trade every gap you see. You'll blow your account. You'll need filters. Here are my 3 golden rules. Rule number 1, the trend, the 200 EMA. Don't eyeball the trend. Let's be precise. Go to indicators, type in EMA, exponential moving average. Go to settings, change the length to 200. If price is above the line, only look for buys. If price is below the line, only look for sells. This keeps you on the right side of the momentum. Rule 2, the kill zone. We only trade when the money is flowing. That means the London and New York sessions. Avoid the Asian sessions. It's late night UK time. It's slow, it ranges, and the spreads are terrible because there's no volume. Stick to 7 a.m. to 8 p.m. UK time. That's where the volatility and the profit's hidden. Rule number 3, validating the imbalance. This is the technical bit. Pay attention. For imbalance to be valid, the wick of the first candle must not touch the wick of the third candle. If they touch, the market is efficient, no trade. If there's a gap, this is your entry zone. Pro tip as well, you can use an indicator called Imbalance Finder or FVG on TradingView to spot these automatically if you're new. Before I show you the live trades, we need to talk about why most of you lose money, okay? So imagine I've got a coin. Heads, I lose £100. Tails, I win £200. If I flip it 10 times, statistically, I get 5 heads and 5 tails. So losses, 5 times £100 is minus 500. Wins, 5 times £200 is plus 1,000. So I'm net profit £500. I can lose half the money and still make a fortune. This is called risk to reward. Amateur traders obsess over winning every trade. Professional traders obsess over the maths. I don't care if I lose a trade. I care that my wins are 2 to 3 times bigger than my losses. Even with a 40% win rate, losing more often than you win, if you've got a 1 to 3 risk to reward, you'll be profiting. Stop listening to gurus that tell you otherwise. It's just simple maths. So here's the setup. We are trending below 200 EMA. It's London or New York session. We spot a valid imbalance, so a gap. Entry tactic. We expect price to come back into the box. Scenario A, price taps the start of the imbalance. We enter here. Stop loss goes below the imbalance candle. Target is a minimum 1 to 2 risk to reward. Scenario B, the sniper. Sometimes price pushes deeper. The sweet spot is the 50% line of the imbalance box. Use your Fibonacci tool, draw from top to bottom of the candle to find the 50%. I often place 2 trades, one at the start, one at 50% to improve my average price. Right, let's see this action on my account. Okay, looking at Bitcoin here, trend is good. We've got a lovely imbalance here. See that gap? I've set my limit order. Stop loss is tight and we're in. Now we wait. Price is correcting perfectly onto our zone and boom, look at that reaction. We're up $400, $500. I'm going to bank that. That's a quick £400 profit for a few minutes work. Next setup, this one, I'm using the 50% rule. I've got my first entry, but I'm laying a second one at the halfway mark of the candle. The market draws down, looks scary to beginner, but my math's saying we're safe. It taps the 50% and rejection, immediate reaction. I'm up 300 pips on the first, 500 on the second. Total profit here is pushing $2,000, approximately £1,600. 2 risk to reward, job done. Look, this isn't magic. It's patience, it's discipline, and understanding where the big money is moving. Go to your charts, look for the 200 EMA, identify the session and spot the gap. Backtest this for 2 weeks before you put a penny of real money in. If you want to see exactly when I'm entering these trades live and get access to the more advanced strategies that I don't share on YouTube, click the first link in the description. Join the private group and let's crush the markets together. Don't forget to subscribe. Proper risk management always. This is Jay. I'll see you in the next one. Cheers.